All right, good morning, everyone. Yeah, it's still morning, a few more minutes. Futures Brizio here. It is now, like I said, just about noontime here on um, Tuesday, February 25th. Hope everybody's having a great week so far. I know I have not been making too many videos um, since basically since Friday. We have some friends actually here in town visiting, so this will probably be the only video I make today. And hopefully I'll be back a little bit more consistently, probably starting tomorrow. Whoa, what was that? Sorry, guys, just dropped something. Tomorrow afternoon. And also just looking ahead, next week, I'll be out of town. I'm actually going to Las Vegas. So, although I'll be bringing my computer to keep an eye on things, I probably won't be doing a lot of trading, and um, high probability I won't be making any videos next week at all. So, because I'm leaving Monday, I won't be back till sometime on Friday. So just kind of FYI, if I'm away and you wonder what I'm doing, that's why. But certainly I'll be keeping an eye on things. But like I said, I probably just won't have a lot of time to actually trade or record any videos. But we'll see. Um, so, anyways, as always, well, I'm doing this live, so if you join the stream, make sure you say hi. If you're watching this later, just make sure you like the video, subscribe to the channel, leave any comments or questions down below, and we'll just jump right into a quick update on the market. So we'll start here since I'm on this page with copper. So you can see I'm currently in a short on copper, and basically, the setup is we're in bearish order flow right here. If we go out to the 4-hour chart, we do have this swing high that I've marked off here, and this is kind of how I consider this. This is the swing point. Everything else going down here is basically just internal structure on this time frame, because people are like, well, why don't you consider this like a structure point right here with this pullback? Well, the reason why is because you can tell just by looking at its kind of internal structure. You can see if I drop a trend line on here, which I just did, you can see that these all these highs kind of ride along the trend line. So as far as I'm concerned, all of this, like this little, this bullish candle, this little bullish candle, those are not major structure areas. They're just internal structure on the way down, where the market just takes a little breather and then keeps going, right? Because it never goes in just a straight line. Okay. So to me, this last swing point, which is obviously a much more obvious pullback area where it, pulled up with several candles, kind of, took out, after making a new low, it kind of went up. This to me is a much more viable structure point. So that's why I don't consider this stuff along here to be pullback areas. If we drop to the 1-hour chart, again, you can see the trend line holds this in. Now, these could be entry points on a shorter time frame, but in terms of just looking at overall structure and say, why do I consider this bearish order flow? Well, that's why, right? So, all right. So, anyways, so we're in this one short from here. And if we drill down to a little shorter time frame, it's kind of a late entry. Really, the entry here was at the close of this candle. I did get in late, and I'm not sure how much longer I'm going to actually hold this just because of the time of day. But we'll make a little profit on this, better than nothing. But I really did miss the entry. And I wanted to just talk about the indicator. I'm sure you're seeing the indicator there on the chart, and you can see that the moving average that I've been using is not showing right now. This is purely a preference, and like I said, I could go either way with these things, because as long as you can read market flow and market structure, you don't need any indicators. But the indicator, whether it was the 10 period moving average or this indicator, is just simply a way to help you time an entry. It's not supposed to tell you anything about trend or market structure or what side you should be trading on. That you have to do by just looking at the price action, okay? But the indicators are strictly a way to help you time an entry potentially, okay? So what this is the CCI indicator, the Commodity Channel Index. It's an old-fashioned It's an old-fashioned indicator. It's in any trading platform. So in MetaTrader, it's under oscillators because that's what it is. It's right here, commodity channel index. And I have it just set to the default 14 period. Obviously, you can change the color. There are some other things you can change here in terms of how it's applied. I have it applied to this typical price, but if you change it to close, it doesn't really change anything. You can see I just added it up here. It doesn't really change anything. It just makes it a little bit more potentially can smooth it out or run it or or make it more choppy. But in terms of the levels, it doesn't make any difference. So you can leave it at close. I think that's how it defaults to close. Okay. So how do I use this? Well, basically, again, let me also say another thing. I only use this on like the 30-minute, the 1 hour, the 4 hour. Okay. Now, if you only want to use it on the 4 hour, perfectly fine. Again, the higher you go up in time frame, the more quote accurate these indicators will become in terms of signals. Okay. So how I would use this, you could do two things, right? If you only want to trade on the higher time frame, you just want a very mechanical, low trading volume type of system, you can just go on the 4 hour chart and use it. Okay. And so basically what you would do is, let's take this uptrend right here, right? So every time price, when we're going up here, every time the CCI comes down and either hits this 100, this level right here, or dips below it and then crosses back up again, that's an entry. Okay. So over here on this current down order flow, you can see we've got the CCI right here crossing back below, right? So crossing down now, and so when it crosses this 100 barrier right here, that's an entry. Okay. And over here on the candles, it would have actually been like on this candle right here. Okay. Now you can fine tune that entry on, say, a 30-minute or a 1 hour time frame. So if we drop a horizontal line on here, that's pretty much right at where it crossed over. Now we'll drop down to the hourly chart, and the crossover on the hourly chart was actually right here, which would have gotten you in a little bit sooner. And this is actually an excellent entry right here on the hourly chart. And you could have gone all the way down. Now, if you go back to the 4 hour, and let's take this off. I know what I would ask. It would be like, well, that's fine, you get in, but what if you missed this entry for whatever reason? You're not looking at the chart, that you weren't looking at this market, just for whatever reason you missed it. Okay. And you've got like a long stretch down. You're like, oh, look at all these other places I could have got in, but there's no signal on the CCI on this time frame because there isn't. Well, then in that case, then you can drop to the 30-minute chart, and maybe you can find some entries here on the 30 minutes. So here's that one structure point right here, where we didn't have an entry on the 4 hour, but you can see it provides a nice entry here on the 30-minute. And then there's another one right here, and there's another one right here, and these all would have been good entries. Now, it's not always this textbook. This is a very clean downtrend. When you can snap a trend line on these things, I mean, it's like shooting fish in a barrel, right? It's not always going to be this clean. So you have two options. If you miss an entry on the higher time frame, you can either say, okay, that's fine, I'm just going to let this thing go, and the next time that it, assuming the downtrend continues, the next time it pulls up above here, then I'll look for an entry. Or if you think you might still want to try to get into the trend, if you've missed the 4 hour entries, again, go down to the 30-minute or the 1 hour and use the CCI to find your entries then. Okay. Now, this is basically the same exact thing I was doing with the moving average. Remember, I had the 10-period simple moving average on here. And again, remember with that, what I was looking for is, in the case of a downtrend, to see the price break above the moving average. As long as it doesn't take out a structure area, wait for it to move above the moving average. And then that's your cue to start looking for entries within the trend. And again, the same thing would happen on the 4 hour. You would have an entry, and on the 4 hour, you would have an entry right here using the moving average, but you would have missed all of this on the way down. But if you drop down to the 30-minute, then that moving average would have given you basically the same kind of entry points that the CCI is giving you on this shorter time frame. Okay, so you have two options. If I miss a 4-hour entry, what do? Well, again, you can either just say, you know what, I'm just going to let it go and I'll wait for the next entry. And eventually, as long as the trend stays intact, you will get another pullback on the CCI, and then you can fine-tune the entry again on the 30-minute to 1-hour time frame, and you'll get your entry. If you really can't resist and you want to just be able to take part of a big move up or down, then you can drop to the 30-minute to the 1-hour and use the CCI to find entries within these, in this case, what I call the internal structure run, in here, like at this point and this point, like I just showed you on the lower time frame. Okay, so it all just depends on how much time you have to look, how aggressive you want to be, how much you want to be in the market, etc., etc. Just understand, though, as you step down in time frame with any indicator, whether it's the moving average or CCI or anything, the more risk of false signals you're going to get because the market becomes more noisy. Okay, so you do have to keep that in mind. So I wouldn't do anything lower than a 30-minute time frame, just as I wasn't doing anything lower than a 30-minute with the moving average. I'm not doing anything lower than that with this CCI indicator. And again, what I go back to what I said at the beginning. The signals you're going to get on the CCI is essentially the exact same type of signals you're going to get with that moving average that I had on there. It's just that if you don't want to have anything actually overlaid over the candles, you just want to have your charts clean, but you still want to be able to have some kind of indicator to have you time entries, then the CCI, I think, is an excellent indicator to use. It's an old-fashioned indicator. I'm not going to get into how it's calculated. You certainly can look that up. It doesn't really matter. What matters is that you know how to read it. And basically, again, what I'm doing is I'm looking for, in a downtrend, I'm looking for the CCI to come up above this 100 level right here, okay, which is a preset standard level. And then as soon as it closes back below, I will wait for the candle close. Then that's an entry. And again, if it gets to this point, I'm going to drop to a lower time frame, again, the 30-minute to the 1-hour, and look for potential setups there. Okay, because you could get a very poor entry if you wait for the 4-hour. You might get a good entry, but if you get like a really big bearish engulfing candle, by the time that candle closes and you get the positive signal on the CCI, you may have already missed a big move. Where if you're looking for shorts, and as you see that the indicators start to come down on the 4-hour back towards crossing through this 100 level, then at that point you can drop to your lower time frame and fine-tune your entry down there, and also potentially have lower risk too, because your stop loss will be based on that 30-minute time frame or the 1-hour versus a 4-hour time frame. Okay, but again, this is going to give you basically the same type of entries you get with the moving average. It just takes the indicator off your candles and moves it down here. Okay, but remember, all indicators lag, and all indicators, as you go step down in time frame, are potentially going to generate more false signals. The other thing I mentioned is that I just use the standard 14 period CCI. This is the default setting is 14. If you wanted to make it even closer to the moving average, because remember I was using a 10 period simple, even though this is not based on a simple moving average, you could actually just make this 10, and I don't really think it'll make much difference. All it does is makes the chart a little more noisy. But if you wanted to kind of fine tune it a little bit, you could potentially lower it to 10 periods. But again, there's always a fine balance. If you lower the calculation period, yes, it makes the indicator more, quote, responsive, but it also potentially is going to generate more false signals. And again, the lower the time frame, the more the false signals. So in reality, I would just, in my testing and my use of this indicator I just leave it at 14. You're not going to really get that big of a difference. And if you go to the lower time frame to fine tune your entry, you shouldn't really need to adjust that too much. Okay. Oh, hey, Castaway. I'm sorry. I just saw in the chat. How you doing? Good afternoon. Thanks for joining. I was just doing a quick market review, and on top of that, just talking about using a CCI indicator for timing entries. Again, it's not a trading strategy, I'm still just using market structure and trend to determine, what direction I want to trade in using the higher time frames. But the CCI can help you fine tune an entry, much like the moving average does. So, but it just gets the indicator off your chart and puts it down below. The other nice thing about this is, like, suppose I just don't want to look at it. I only want to look at the charts. I don't want to create any unconscious bias about just because of the indicator being here. Well, a nice thing about trading, about MetaTrader, is you can just grab this right here and just pull it down and scrunch it, and it's out of the way now, like it's not even there, without actually having to delete it. And then when I'm ready, I can just bring it back up on the chart. In TradingView, you can do the same thing. In TradingView, they have that little eyeball icon where you can just click it, and it just temporarily takes the indicator off your chart without actually deleting it. So you can open and close it without actually taking it off the chart. So, all right. So again, 14 period CCI, old-fashioned indicator. It's been around forever. But again, just remember, it's an indicator. It's not perfect. It's going to lag. It's going to provide false signals sometimes. And again, I don't use it. It's not a trading system. Okay. It's basically just a timing thing. Okay. But still, I'm monitoring price, order flow, and, what's the trend. And again, on futures, I like to use basically the 4 to 12 hour chart, somewhere between 4 and 12 hours. The 4 hour preferably, to mark what direction I want to trade in. And then, again, you can trade the CCI directly off this time frame, but you may get some really late signals. And so I do suggest, as again, in this case of a downtrend, as price begins to hit this plus 100 level, and you could be looking at this in the past and say, okay, this is potentially setting up. Well, I will wait for a candle close, but I will go to the shorter time frame, and you're going to get a better entry, because the CCI obviously will then be based on the 30-minute or the 1 hour candles versus a 4 hour candle. So, but anyway, so that is an entry, back here. And then this was an entry actually using the CCI on a shorter time frame. I was just talking about order flow. You can see you didn't get the entry on the 4 hour because the CCI, didn't come up very much. Certainly didn't come back up here. But on a shorter time frame, the 30-minute, 1 hour, this actually was an entry. So, although, like I said, I did get in a little bit late. So, does it have wrinkles? Uh-oh. Sorry, Castaway. What do you mean, does it have wrinkles? I obviously missed that joke. Did I say something about wrinkles? So, anyways, just let me know. All right, so let's just move on quickly here. This is natural gas. So natural gas, I still think we're going to probably see some downside here. We did take out structure on the 4 hour chart right here. You can see price went up back here. Okay, you had this big pullback. Price went up, actually failed to make a new high, and then took this structure out right here. And then, we did go down, make a low, and now we've just been kind of trading up. So to me, this still looks fairly bearish. And you can see on the 4 hour chart, again, using the CCI, there's no signal here. The CCI is working its way back up, but there's no signal here right now. If we drop to a 1 hour time frame, you can see, and what I was talking about, potential false signals, even if you look at the last few hours here, you can see we had this crossover right here on this bearish candle right here. We had the CCI cross down. And then it ultimately might just smash through here. This might end up turning out to be a really good signal. You could potentially trade this aggressively, just get in on this close of this on the 1 hour chart, go short, put your stop right above here. But you can see I have this little internal trend line drawn. I would have wanted to see it, come down and take out and close below this trend line. That would give me a little extra confirmation. But you don't have to wait for that. I mean, you could trade this signal if you're looking for, an old indicator. Yeah, good one. Yeah. It does have some wrinkles, that's for sure. This indicator's been around probably, I think it came out in like the 1950s or so. So it's been around a long time. 1950s, 1970s. I did look it up once. You can Google like any indicator. You find like Investopedia or something. It'll give you the whole history of, who created it and how it's calculated and all that stuff. So, pretty cool, but not really necessary to know how to use it though. So yeah, so there is a signal here on the 1 hour. Is this a false signal because price came down, just hit this little internal trend line and then stopped, or is it just telling you, hey, it's the momentum on the indicators telling you to go short? You go short here anyways, put your stop above here, and then just wait. And if you get taken out and it goes back up again, oh well. If it breaks through, then you get an excellent entry. I don't know. But like I said, there's no entry on the 4 hour. So if this ends up breaking lower now, you're going to miss this if you only use the CCI in the 4 hour. So if you're convinced that your bias is that you're looking for downside entries and you're afraid you might miss it, I don't know. This CCI could end up going, that's the risk. If you get in on the 1 hour and it turns out to be a false signal, in the meantime, the 4 hour CCI keeps going up here. Eventually, it just keeps riding along this trend line. It goes up, and then eventually it gets up into this area above plus 100, which if you want to call it overbought. And then it starts breaking down, and you start looking for this signal here. When it breaks below here, then you're jumping down to the 1 hour to look for an entry when it comes back down. So that's, again, what I was talking about, that there's always risk on these indicators on the shorter time frames of false signals. It just depends how aggressive you want to be with it. And again, if you just want to wait for 4 hour signals, that's great. Just understand that, there's not going to be a lot of those, and you could miss, a big move down and all that internal structure because you're not going to get the signal on the higher time frame, but you could drill down. So it's just kind of a risk preference, but that's how you can use the indicator. All right, so moving on. This is cattle. So again, we'll go back to the 4 hour. I would say we're still in bearish order flow. I still consider this to be the most recent swing high. You could make an argument for this, but I'm still looking at this area. So I'm not going to be trading this either way until I either get a bearish signal back down, or if we come up and take out this structure level, I'm not trading this. So on the 1 hour chart, you can see we have the CCI turning back. It's still above the plus 100, so there's no entry here. Even on this time frame, I'm not looking to enter this. But, this could be getting up into an area where if the bearish order flow is going to continue, this could be a really good entry at some point if we don't come up here and take out this. If we take out this area right here, then we're probably moving higher, and then my bias will switch more bullish. But as long as we remain under this level, I'm still potentially looking for shorts, but I'm not going to rush it. I'll let this thing play out. So the DAX has been a mess really since Sunday. So you can just see we're just moving in this range. On the 4 hour chart, it looked like it wanted to try to go up again today, and then it just hit a wall and came back. So the DAX is kind of in a little transitional period right now. You can see we've been moving sideways for several days now. So I'm just watching this, but that big bull run on the DAX is at least taking a break here. And at the moment, I'm not really too interested in trading it. And then finally, we already talked about copper. So, all right. So that's it for futures. Moving on to Forex. I have reduced my Forex pairs down to just 3. As you guys know, I also had, besides Swiss yen, I had Euro yen and dollar yen up here. I decided to just go with Swiss yen and just get rid of Euro yen, dollar. There's no need for me to really have 3 yen pairs. Most of the time they move. They're not going to be exact, but if you lay those 3 pairs against each other, especially on like a higher time frame, you're going to see they move very, very similar to each other because the yen is what's creating the patterns. So because I don't trade futures exclusively anymore, I'm just trying to really filter down the number of assets I look at. And so this way here, I've got a pound pair, I've got the pound in there, I got the dollar, I got the euro in there, I got the Aussie in there, I have the Swiss and the yen. So the only major currency I don't have represented in any of these pairs are the New Zealand dollar, which the Aussie dollar is very similar anyways, but the NZD, which tends to be more erratic anyways, and the Canadian dollar. And I'm just not I just have found, just personally, I'm not a big fan of CAD pairs. So even though it's a North American currency and it's great for time zone that I'm in, I just decided to walk away from it. I've gone from, trying to use Euro CAD, Dollar CAD, Pound CAD, and I just don't like the way it ranges a lot. It's very choppy, and, I've just decided to walk away from it. So I'm down to just these 3 pairs, and I'm okay with that. So, so yeah, Castaway. Yeah, I've been saying that for a while now. Are we talking about the yen pairs? So, anyway, so I find Swiss yen to be probably the smoothest of those. If you go out to like a higher time frame, weekly time frame, daily. Again, not that it won't have its choppy ranging times, but overall it does move pretty well, and it moves quite a few pips too. So I do like it. If you go out and look at the daily here, yes, it does go through some range periods, but for the most part, the structures are pretty good. So, we're in bearish order flow right now. So if we look at this, however, though, remember, as I've been saying on this pair for a while, we are sitting at an area right here where we've bounced off of in the past. And you can see that price is having a hard time getting out of it. It's come down to this. It tagged it here, tried to go up, came down, tagged it again, and now it's just kind of sitting here. So the whole pair right now, I'm a little leery about taking anything on this because of where it's sitting on the daily chart. I would love to see it either smash through some structure on the higher time frame, on the mid time frame, like around the 4 hour. Maybe if it came up and like smashed through this level, I'd start to turn a little bit more bullish. But for bear, I would like to see it, probably come down and take out like this level right here, a little bit lower. I can't move this now, of course, so I'll just put another line, something like below here. So I'm kind of in a watch period on the Swiss yen after this big run down. I think it's in a little bit of a pause, maybe not a reversal or transition period, but at least in a pause period. So the GBPUSD did have a nice little run up here, and I think it might actually still keep going up. I do think there's valid structure right here, and maybe it runs out of steam and rolls over here, but we could keep pushing up here. We do keep putting in some higher highs and higher lows, although we did just in the last 4 or 5 hours here failed to put in a higher high right here. So again, on the daily structure and on the 4 hour, we actually are still technically in a downtrend. So is this, kind of warning of a reversal back down? I don't know. We'll see. Again, I'm not ready to trade this to the downside yet because, there's still market structure on the shorter time frame sitting right here. So I'm not taking this short signal on the CCI here on the hourly chart, and we certainly don't have it on the 4 hour. And this is one area where potentially you could wait for a 4 hour return. Although again, let me just say one other thing. I don't, indicators in Forex to me are not all that good. You're going to tend to see more false signals on Forex, and there's a very simple reason for that. You got to remember, if you don't already know this, is that the Forex market is decentralized. Okay. The futures market is centralized. All the trading goes through a central exchange, like for copper is going through the CME, the Chicago Mercantile Exchange. So all the brokers, all the traders, everybody's orders are going through the CME exchange. So you're seeing the actual market picture because everybody, whether it's a retail trader or an investment house or, the producers or the users, everybody's going through the CME. In Forex, you don't have that. What you're looking at on this chart right now for this price action, even though it's going to look very similar on any broker, it's only being represented by what's going on with my broker. In this case, it's EUAUD. You're only seeing these indicators are being affected by volume, only volume that's being generated from your broker. So it's not always going to give you a clean look of what the market is actually doing. Even though the price might look the same, it can affect how these indicators are calculated. Okay. So I don't put as much weight in them. They tend to be a little bit more erratic, and also because Forex can be more heavily manipulated because it just is. Because again, you don't have a centralized exchange, and you've got so many competing forces, pushing and pulling on these currency pairs. So, all right. But from a standpoint of just following the trend, the daily trend, the order flow is bullish, but we still do have, you also have to remember, we do have this big swing point sitting up here from this last down move. So we'll have to see. There's no reason why you couldn't have traded this on the way up. This is a daily chart, and it's very bullish order flow. But you can see the range is getting smaller now. Every time we pull back and go up, the up moves are getting shorter and shorter. So is it running out of steam? I don't know. We'll see. And again, we did just put in this lower high today as we are moving up here. So I'll be watching this and potentially see if we get another push back higher. If we eventually push down and take out this zone, then that could be a great look for it to go lower. But it's bullish for now. We'll see how this thing proceeds. And lastly, on the Euro Aussie, on a shorter time looked super bullish. We had this, let me see here if I can find the right time frame. We kind of had this trend line that was broken. Price shot up through this trend line, okay, and was on this 4-hour candle that's in process right now. This thing like shot right up and looked like it was going to just blast. And you can see now it's pulled back off of this high right here. And again, we still have this swing level sitting in here. So I'm going to take the trend line off. We go back to the daily chart. You could make an argument we're still in bearish order flow from this point down, then up, and put in a new low, although not a real strong new low, and then back up. Okay, so again, this move up certainly was tradable, but just keep in mind though that we do have this 4-hour swing level sitting here, and price is reacting off it. Doesn't mean it's going to fall away from here, but just keep it in mind. This area is being watched by a lot of traders for people that want to go short and sell the market from here, or people that were long and cashing out and taking profit at these levels. That's why we're having a reaction from here. So the question is, does it follow through and we start breaking lower again, or do the buyers step back in, smash it through this level, and then we turn higher, in which case you definitely would have to have a bullish bias if it takes out this level, in my opinion. So we'll see what it does. And I'm keeping an eye on it. I did take a long on this. I'm already out of it. I took a long earlier from about this level. I did get out early. I got out at the close of this candle. I just wanted to make a new high. And it did shoot up. And, I was like, oh, I left this on the table. But you can see it's come back down almost to about where I exited. So if I had held it, I really probably wouldn't have made any more than I did this morning when I closed it. So yeah, and again, I'm not as keen on the CCI in Forex as I am using it in futures, but I'm going to leave it on here for now and just, keep an eye on it. And I do think that from a standpoint of time frames, it's certainly better to watch this on the higher time frames, especially in Forex. So I just think it's more accurate. You're going to get a lot of false signals, but I think you'll get less of them on the higher time frames, especially in Forex. I'm just playing around with the supply to close. It defaults to close. I'm just playing around. It does smooth it out when I use. It doesn't really change how it reacts to the levels. It just smooths out the actual moves on the indicator to use typical price, this high-low close divided by 3. It doesn't really matter. You can, the period length is more important. Again, I just leave it at 14. So, which is the default setting. So, all right. So yeah, so that's it on Forex, just those 3 pairs. And, that's kind of the story. So I just did want to point that out, in terms of using the moving average, the time entries versus using CCI, completely up to you, or use none of them. But if you like to have one indicator to help you time entries, I think these are both really simple and easy to use. It's just a matter of whether you want it painted on the chart, on the candles. Some people like that view better, or whether you want it down below. You got to, play around a little bit more with adjusting the time frame and, using your crosshair tool to kind of see, where it lines up down below. But again, the nice thing is if you don't want to look at it for whatever reason, you can just shrink it down and take it off your chart so it's not biasing, and you can just look at all the price action. So it really just depends how you want to use it. Whereas with the moving average, if it's on the chart, the only way you can get rid of it in MetaTrader is to actually just delete it off your chart. And that might be a pain. Obviously you can set up a template so you can just put it back on quickly. But if you've already marked up your chart with drawings and you reapply a template, you're going to lose all your drawings. So that could be another, just a logistical reason why using the CCI might be better than the indicator, because it won't affect the drawings on your page, but yet you can shrink it down and take it out of your view if you don't want to look at it. So, all right. But again, I put a lot less weight on the CCI on these Forex pairs, and but I will weigh it more on the futures pairs just because of the way these markets are traded. So, yeah. So that's about it. Hope that was helpful. As I said at the beginning of the video, I should be around the rest of this week, especially at this. I may not make another video today, but probably starting later tomorrow, Thursday, Friday, I'll be around. But then I will be away all next week, so I probably won't be making any videos next week. I'm not even sure how much I'll be trading, but I can almost assure you I won't be making any videos next week, as I'll be away and I probably just won't have time. So. Plus, I'll be in a different time zone, which is going to make it a little bit more challenging for trading anyways. And so for that reason, even my trading might be pretty minimal next week. But we'll see how it goes. But if I am away, just want to let you know in case you're wondering where I went. That's why if you don't see me, I've just taken the week off from making any updates. But I'm sure everybody will live, and that's fine. But any questions, comments, make sure you leave them down below. If you're just watching it on the replay, appreciate it. Castaway, hope you're doing well, and have a good rest of the day. Hope it was helpful. Any questions, let me know. And I will talk to everybody soon. Take care. Have a good rest of your afternoon, and I'll be back probably tomorrow. All right, take care, guys.